Welcome to the CWC podcast. Welcome back, everybody. Today, we are actually doing a special show. We're switching gears a little bit from what we've been doing the past 2 or 3 shows. You saw the OnlyFans interview we had last week with Brittany Chloe. If you didn't see that, go check it out. Great interview, very informative. I think there's a lot of good information to be learned from that particular video. And we're actually getting a lot of good feedback on that video as well. So there'll be more to come with that in the future. But right now, we're switching gears a little bit. We're actually going to be talking about, and I spoke about this in the intro and in some of the other videos. This is an all-encompassing channel. Eventually, we'll get to the point where we start breaking off and having sub-channels. Once we get to a point where we have a big enough audience where that would be required to have different channels broken off in different segments that we're going to cover. But right now, we're kind of an all sizes or one size fits all, I should say, when it comes to the channel. So today we're switching a little bit. We're pivoting a little bit to this is actually going to be an introduction to cryptocurrency video. I think this is a great time to actually drop this topic and bring it up. It's something that I've spoke about before. Whether you're involved in cryptocurrencies or not, I think right now is a time to be paying attention to that market. Right now we're in a very tumultuous period. We're in the depths of probably our third crypto winter that I've experienced. Those veterans out there who have been in the markets for a number of years understand what a crypto winter is. It's just basically a bear market in cryptocurrency where the valuations of all of the tokens in the crypto universe are way down, way down from their bull market highs to where they are right now in the bear market lows, which I believe we're approaching an inflection point where we're about to, if we're not at the bottom, we're pretty close. I think probably for the next few weeks. It's probably a safe bet to say that we're probably going to bottom out for the market. I think that, once you start seeing so much negativity and so many negative headlines, and crypto Twitter is almost completely negative. It's like in the opposite direction. When we were in a bull market, Bitcoin was at 69,000 to a man. Almost everybody on crypto Twitter, all your influencers on YouTube, they were all talking about, we're going to $100,000 Bitcoin. We're going to $200,000 Bitcoin. That's usually indicative of a top. You're getting close to the top when you have everybody and their mother shouting from the rooftops that you need to get in right now. Right now, what we have is the opposite. Everybody's on a rush to get out of the market because right now, let's just be honest. There's tons of uncertainty out there right now, not just with cryptocurrency, but all markets. I mean, take a look at the stock market, take a look at the housing market. I spoke about that before. We're going to actually have a housing specialist come on, a mortgage specialist come on with us in a few weeks to give us a deeper dive into the housing market, because I still believe there's another shoe to drop on that side of the fence as well. I'm not a real estate guy, but I'm looking forward to learning more and more about it, because who knows in the future. I mean, I think real estate is a great investment avenue, but there's a time and a place to invest, right? So that's why we're speaking about cryptocurrencies today, is I believe that right now, I mean, I'm a cryptocurrency bull, a cryptocurrency proponent. I've been involved with cryptocurrencies in some shape or form since probably about 2013, 2014. I've been through lots of market cycles, ups and downs, twists and turns, days of thinking that, everything's going to zero to days that we think everything's going to $1 million. So I've been through the roller coaster. Those who may be listening that may be involved in cryptocurrency, if you've been involved maybe even within the last year, I think a lot of people got involved during the pandemic. And, people were reaching out and wanting to learn new things, right? So they started learning, they started hearing, hey, what is this Bitcoin thing? What is this Ethereum thing? What is this Cardano thing? What are all these different cryptocurrencies? What's an ERC20 token? What's a layer 2 token? All these different questions. And people started, as they had more time on their hands, everybody's sitting at home, they took a dive into cryptocurrency, which was good and bad, because what we experienced was kind of a melt up period where it didn't matter what you bought. You could throw a dart at a piece of paper that had 500 cryptocurrencies on it. And if it landed on any of them, you put money into that particular project, chances are you were going to make money, at least in the short term. Unfortunately, now we're in a recession. I really don't care what anybody's opinion is on that. I mean, I think facts are facts and reality is reality. You can get into the political terms of, we're not technically in a recession. Well, go out here and talk to your neighbors, go out here and talk to people your coworkers, go out here and talk to the average Joe. Almost everybody I know right now is struggling. Struggling doesn't mean that you can't pay your rent or you can't pay your bills or you can't put food on the table. It means that doing those things is taking a bigger and bigger portion of your budget than what it used to, right? So I think if you look at, I mean, everybody knows everyone buys groceries, everybody buys gas. Those two things have gone up exponentially in the last year, year and a half, along with, the purchasing power of the dollars in your pocket that you earn from your job. The purchasing power is going down because inflation is right now it's rampant. I think the most recent CPI numbers that came out last Friday was 7.7 some percent, around that area, around 8% inflation is the official inflation rate. I personally don't trust any of the data that comes out of the government. The CPI numbers and all those things are massaged. They don't ever include everything that you need to know. When they talk about inflation, the CPI index and the CPI index, for example, food and fuel is not included in that index. So then it's not a complete index, right? Because aren't those the two things that we buy every single day? Oh, but let's not include those in the calculation. So it is very confusing. And a lot of people just simply don't know how, what inflation is, how it occurs, the things that exacerbate it. I mean, you see right now, when you look at what the Fed is doing, they're aggressively raising interest rates. Why? Because they're trying to stamp out inflation. They kept interest rates artificially low for many years, suppressed them through quantitative easing, different things, basically printing money. And it suppressed real interest rates. So it made it cheaper for people to be able to go out and basically speculate. I mean, you could legitimate investment as well, but it made it very easy. Money was easy to attain. You could go to a bank, not for me and you, right? But I mean, for institutions, they could go to a bank and borrow money from almost 0%. They could take that money and they could invest in stocks. They could invest in cryptocurrencies. They could invest in real estate. They can invest in pretty much whatever. But they kind of had free money, right? I mean, you go to the Fed discount window, you could like 1% or less than 1% for a major entity. That's nothing. I mean, you're paying almost nothing back, right? So if you can borrow money, go and make 20% of that in another market and then come back and pay your loans off, you're making money. You're doing quite well. So that was the environment that we were in during the QE phase. Now things are tightening. Now, as we go into the end of the year, everybody can feel the squeeze. I mean, you go into the end of the year, you've got holidays, Thanksgiving's coming up, Christmas, whatever you may celebrate. It's an expensive time of year, right? So the last thing people want to do right now, people are in kind of preservation mode, right? They want to conserve. They don't want to spend as much money. I mean, I talk to people in the service industry all the time. Their tips are way down. Regulars that used to come in and, on a Friday night and maybe have dinner and a few drinks and leave a nice tip. Well, now those tips are getting a little bit smaller. Now they're not ordering that second appetizer. Now they're not ordering that second bottle of wine. Everybody's kind of tightening their belts. And I think it makes sense. I mean, as things tighten up, a lot of us, if you're a renter out there, for example, a lot of you had your rents go up exponentially in the last year. I know several people. I mean, I know one young lady, unfortunately, she had to move to Georgia. She couldn't hack the increase in her rent. She was renting from a private owner, and the guy one day called her up and said, "Hey, your rent is now $1,300 more than it was last month." He didn't give her any wiggle room. He didn't feel sorry for her. He didn't say, "Oh, well, I didn't raise your rent in the last 8 years. So let me give you a break and let me, give you a warning that, hey, next year your rent's going to go up by X. This year it's going to go up by Y, because I know I'm kind of springing this on you." Unfortunately, most landlords didn't go that route, and they chose the route of, well, I want to make the most money right now. And it's just supply and demand. Like in the building that I live in, for example, half of New York has moved into this building. It feels like, half of New York, New Jersey, Maryland, every day there's another car with a plate from one of those states, California, Ohio. I've even seen Oklahoma. So we went from being kind of, probably, I don't know, maybe not even 3/4 full in the building to now we're full. And and so rents have gone up with that demand by basically almost $1,000 a month if you're moving into this specific building. So these are the challenges that are facing all of us. And so people say, "Hey, well, yeah, man, it's the good news is it's not going to continue like this forever." I do think that 2023 is going to be a challenging year. I think, we're still kind of in this political malaise, this kind of political stalemate. I think that, everybody knows we're very, very very divided as a country and as a people, which is all by design, by the way. I've already told you that's what the powers that be want. They don't want us uniting and figuring out ways to get out of this matrix. They want to keep us fighting with each other within the matrix. But with that being said, I think that, where there's chaos, there's opportunity. And I believe that right now, over the next 6 to 8 weeks, I think you're going to have a really good opportunity if you're interested in getting involved in cryptocurrencies. I think that now is a much, 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 much better time than it was when Bitcoin was at $69,000, almost $70,000. That's when most people want to invest, right? When Twitter's going crazy, when YouTube's going crazy, when everybody's going crazy about, oh, this is the next token that's going to do a 10x or 100x. You got to get into this now. That's when you usually want to be selling. That's usually when you want to be selling. Influencers, by the way, influencers are under heavy, heavy scrutiny right now, because let me share my screen with you quickly. I want to share an article just to give you an understanding of what's going on right now in the cryptocurrency space. So if you're looking at the screen here, you will see that I have an article pulled up from Cointelegraph. This is a popular crypto site you can go to get information. You're going to hear this name a lot, Sam Bankman-Fried. This gentleman is the guy that ran the FTX exchange, cryptocurrency exchange. Unfortunately, this gentleman, he's only 30 years old, but apparently he gained an awful lot of influence in the cryptocurrency space in a very short time. He gained the trust, quite frankly, of a lot of institutions, a lot of big name investors. I mean, you've probably seen they had Super Bowl commercials. They had Tom Brady endorsing them, Gisele Bündchen endorsing them. Big name investors like Kevin O'Leary was involved with the platform. So lots of big names that got involved with this specific exchange, FTX, that this gentleman created. Now, it says here in the article that he's under supervision in Bahamas. He's looking to flee to Dubai. So without getting into too much, because this is very, very, very detailed information, and I'll leave the article in the description below so you can read it. But basically what he's done is he's pulled off the Bernie Madoff of cryptocurrency, the Bernie Madoff Ponzi scheme. He's pretty much done the same thing in the cryptocurrency space. He basically, in a nutshell, took client deposits that people were depositing onto the platform to be able to invest in cryptocurrencies, Bitcoin, Ethereum, etc. And he basically built a bridge out the back door of his exchange to funnel money to a hedge fund called Alameda Research, which in turn took that money to fill gaps in their own balance sheets. And they tried to leverage trade with client funds. The idea was, okay, we'll make the money back and then we'll pay back FTX and then we'll fill our holes. Well, if the trade goes the other way, that's not going to work, right? So that's pretty much what happened in a nutshell. I mean, there's a lot of detail to it, a lot of minutia. There's still stuff coming out every day about this. So it's a developing story. But in a nutshell, if you're looking for kind of the reason that cryptocurrencies are kind of in a tank right now, is look no further than this gentleman. They call him SBF. If you're on crypto Twitter, they call him SBF as his acronym. The FTX was one of the largest exchanges that were operating here in the States. I mean, you've got Coinbase, Binance, and FTX are kind of your big major players. Your big institutions tend to use those platforms. The guy was, I mean, I never heard of the guy. And then all of a sudden here he was on all these commercials and he's on Capitol Hill and he's testifying in front of Congress and all of these things. They were parading him around. I mean, the rumors are that he was, his family is huge donors to political campaigns. He's in bed with the SEC. I mean, there's all kinds of things coming out about this particular gentleman. But in a nutshell, he's the reason why. Because I think if you look back before the FTX news broke, cryptocurrencies were trying to kind of get out of the gutter. They were kind of pulling up. Bitcoin was around 20 to 21,000. It was trying to get its way back up to around 22, 23,000. You saw Friday, we had the CPI numbers came out that were better than expected and all markets shot to the moon. However, the night prior, Bitcoin had already tanked down to about $15,700, somewhere in there, I think a little bit lower. So it only didn't spike up that much the next day. Unfortunately, for people who trade, now, full disclosure, none of what I'm telling you is financial advice. Do your own due diligence. But What I will say is, I do not trade. I am not a crypto trader. I'm an investor. Traders, to me, 90% of traders lose money. First of all, that's a fact. 90% of traders lose money because they're constantly trying to catch the bottom and they're constantly trying to catch the top. They're constantly trying to buy at the bottom and sell at the top, buy at the bottom and sell at the top. Well, that's very, 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 very hard to do. And they end up kind of chasing their tail, and they end up paying a bunch of trading fees and commissions and all these things. If you're day trading, it also becomes a nightmare at the end of the year when you have to do your taxes. So it's very, 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 not to say you can't make money. I mean, there are people who've been successful doing it. I'm just saying, by and large, most traders lose money. So this is not a trading channel. We don't do trading advice. I am an investor, a long-term investor. Now, with that being said, I think there's a time that you do need to take profit and keep some cash on the sideline for opportunities just like this. This is when you want to have. What ends up happening most of the time is most people who are involved in investments, they're all in, right? So they don't dollar cost average. These are some terms you'll hear me use. Dollar cost averaging is simply taking the same amount of money. It doesn't even have to be the same amount of money, but for a general rule of thumb, let's say you're going to take $100 a week and you're going to invest it into Bitcoin. You're going to, every paycheck, you're going to put $100 into Bitcoin, $200 into Ethereum, whatever your strategy may be. That's what dollar cost averaging is. It means that no matter what the price is, you're still putting a set dollar amount into the investments that you've chosen. And that's how you long-term build a position, and your dollar cost averaging in all the time. So when the price is higher, you're obviously buying less. When the price is lower, you're obviously buying more. Prudent strategy is when the market is down like this, you actually want to increase your dollar cost averaging percentage or your amount that you're putting in. What most people will do is the opposite. They will get scared when prices dip, and they'll actually either stop investing or they'll lower their DCA. And then when the prices are higher, they do the opposite. It's just investor psychology. It's greed. Greed gets the best of us all the time. When we're making a lot of money in the market, we don't want to take profit. It's like taboo. We're looking at it like, oh man. I bumped into a gentleman who he's still kicking himself because he had turned about $25,000 into over $250,000 during the last crypto bull run, but he didn't take any profit. So now he's kind of back to where he started. And yeah, I'm sure there's people listening to this that have been in that same boat. It's a hard pill to swallow because the one thing about this market is super volatile. I've seen portfolios swing from 6 figures down to 10 grand and vice versa. It's very, very volatile, very fast moving. But if you stick to the basics, which my recommendation would be if you're interested in getting involved in cryptocurrencies, I always recommend buy the 2 big boys first and then use that time to learn about other projects. What are the 2 big boys? Well, Bitcoin. As a matter of fact, I'm going to share my screen with you one more time. I'll pull up the index that I use to kind of just give you an idea. So where you can, if you want to learn about metrics and different, not technical analysis, but just pricing information, market cap and things like that. If you're looking at the screen here, this is a site that I use. This is coinmarketcap.com. This is the site that I use just to track pricing. And you can see here it talks about the total cryptocurrency market cap. Now, this is the total global cryptocurrency market cap, almost $833 billion. What that means is that is the total dollar amount that's currently invested into all cryptocurrencies as a whole. If you took every single cryptocurrency, put them all together, how much money is invested? Total $833 billion. There's a lot of trust, right? $833 billion, a lot of money. And that's the total amount that investors have allocated to the space. This used to be a $2 trillion market cap when we were, or close to $2 trillion, when we were approaching $70,000 Bitcoin last year. Last year in November, around this time, we were over $65,000, almost $70,000 Bitcoin. Today, we are at $16,546 per Bitcoin. Huge, huge, huge. I think we're down 77% from the high. Most cycle lows are around 80%. So I think we're getting really, really close to that bottom. But you can see here the market cap Of that 800 some odd billion, 317, almost 318 billion is just in Bitcoin. So it's by and large, it is the store of value for pretty much anyone who's involved in the crypto space. This is where you're going to store your money. It's kind of, you can kind of think of it as digital gold in that way, that it's finite. Although we don't know how much gold is out there, but we know how much Bitcoin is out there. That's a key difference. Ethereum is in second place. You see it's $150 billion market cap. So it's around $1,230 a coin right now. And then you get into some of the other coins. We're not going to go too deep into any of these today. Just to give you an idea, if you're interested in finding out what are the market caps, what do these currencies, what do they trade for, how many, what's the float, right? When you're looking at stocks, when you hear float, that's how many shares are outstanding or available for the public to purchase or held currently by institutions. What are the number of shares outstanding? You can find all those same metrics out about cryptocurrencies on CoinMarketCap. So that's the site that I use to kind of track pricing and other fundamentals. You can track that there. So with that being said, is this a good time to get in? Well, like I said, I'd rather buy closer to the lows than closer to the highs. And I believe that we are approaching the lows. I don't think we're quite there yet. I think we've still got, because this whole FTX thing, there's a lot of contagion. There's a lot of exchanges that were in bed one way or another with FTX. So unfortunately, BlockFi was one that unfortunately yesterday halted customer withdrawals. I used to use BlockFi. I was a BlockFi user for probably a year and a half. I took all of my crypto off of that exchange back in June when we had another scare with another exchange that collapsed. I said, okay, let me get all my crypto off of these exchanges. And right now there's only one exchange that I actually have anything on, and that's Coinbase. I've been using Coinbase since 2015. They're kind of like the bellwether in the space. That's the only company that I really would say I have trust in right now in terms of custodying any of my crypto. Otherwise, cold storage is the way to go. Ledgers I swear by them. I bought my Ledger Nano, I think about 6 months ago. I love it. I love the app. The app is Ledger Live is smooth. It's easy to use. Ledger is a hardware wallet, meaning you can offload your crypto to your hardware wallet. You have a seed phrase to your wallet. No one else knows that seed phrase other than you, meaning that only you can access your crypto that is stored on your ledger. Now, well, what if I lose my ledger? As long as you have your seed phrase, you can recover to any wallet. You can recover to another ledger. You can recover to MetaMask or any software wallet that's out there. So I think that's one misconception that a lot of people have of why they don't want to use ledgers, is because they're worried about it's a hardware device. What if it fails? Good question. You can recover. That's the great news. You don't want to be, beholden to a piece of hardware failing. So I get it. But I had to do my own research on that. I was worried about that myself. Once I saw and did a test recovery and all those things, I said, okay, hey, I feel great having my stuff. Peace of mind. Because if you have your crypto on exchanges like FTX, I mean, these people woke up. I feel really bad for these people on crypto Twitter. I mean, there's so many people that I saw that, basically saying that their lives are ruined, that, they had millions of dollars up there. I had my life savings up there. I had all this money saved up there. And now you wake up one morning and it's just gone. I mean, you can't access it. It's frozen. You're trying to log in. I mean, imagine if you say you use banks, right? You log into your bank account and you can't get into it, because what happened, it was basically a bank run. Everybody was withdrawing at the same time. They said, oh man, we got to shut down withdrawals. We're going to collapse. They shut down withdrawal. They collapsed anyway, because they had already stolen all the money and sent it all out the back door. But they screwed you and anybody else who had money on FTX. I feel horrible for anybody that had money there, or had money on BlockFi, or had money in any of these exchanges that have gone down over the last year. If there's a ray of sunshine to this, is that when you start seeing this kind of capitulation, when you start seeing just the fear, the uncertainty, the doubt, when you start seeing exchanges collapsing, people losing millions overnight, it usually indicates that we're getting closer to a cycle bottom. That, I know it's unfortunate to say that, because it takes this kind of carnage, because unfortunately we have a lot of rogue actors in the space that don't have crypto's best interest at heart. They're just looking to make quick money. So you have all these influencers that are promoting all these different platforms that may be proven, may be unproven. They don't know. They don't care. As long as they collect referral fees, they really don't care. So, and it's up to you at the end of the day to do your own due diligence. But when you have your favorite influencer telling you, hey, you need to open up an account on FTX and you're going to get $100 bonus and this, that, and the other, people are going to do it if they want to get into crypto, right? But now what we've done is we've ruined all those people, because if you were somebody who just got in the last year, let's say you start off with $2,000, $5,000, whatever the case it may be, and then you lost it because of no fault of your own, not because you brought the wrong token, not because you invested in the wrong project, but because the exchange, the people who are running the exchange, literally screwed you over. If nothing else, I want to kind of emphasize that a little bit more. What happened this past week has nothing to do with the fundamentals of Bitcoin, Ethereum, or any other cryptocurrency. It has to do with rogue actors in the space who are not doing their job and are taking rampant speculative risks with your money. And unfortunately, now they've killed trust to a point where, unfortunately, like I say, I have almost all of my crypto has been taken off of exchanges. I don't trust any of these exchanges right now, except I do have some trust in Coinbase. They've been very transparent. They've been very clear about stating the assets they have and the way that they hold custodial funds and all those things. I've been using them for 6-7 years. I'm pretty comfortable with them. They're the only one that I would give any kind of endorsement to right now. I don't trust any of the other exchanges, unfortunately. They just haven't given me a reason to do so, right? It's, I'm not putting any coins anywhere anytime soon because you don't trust. At the end of the day, cryptocurrencies are decentralized, but we're dealing with centralized exchanges. We're dealing with people who are running these centralized exchanges. And when those exchanges collapse, it's a black eye on cryptocurrency when cryptocurrency itself didn't do anything wrong, right? Bitcoin didn't do anything wrong. Like, one misconception is people say, I told you this crypto stuff was a scam. Don't get caught up in that. It has nothing to do with cryptocurrency. What it has to do with is the people who are custodying crypto assets for their clients. Those are the people who have messed up the market and that are pushing us down to these lows that we're at right now. So with that being said, I'm going to be doing videos like this here and there. Just kind of intro to cryptocurrency. If you're interested in learning about blockchain technology, if you're interested about potentially investing in cryptocurrencies, I'm going to put some links in the description box. Again, like I said, do your own due diligence. This is not financial advice, but do your own due diligence. I do believe personally that we are headed to a generational bottom here pretty soon. Before the end of the year is out, I think we're going to get probably another flush down or two in price. We probably will. Because there's just so much contagion and so much uncertainty out there. And right now, people are going to sell and ask questions later. Hey, I just want out. Just give me whatever money I can get back and I'm out. And they're not going to come back to the space, unfortunately, because I think that the space is what is the future. I think Web3 is the future. Decentralized finance is the future. I think NFTs to some degree are the future. If you saw recently that Instagram has adopted Matic as their NFT solution for the platform, this stuff is going to happen regardless. It's going to happen. So whether these exchanges get their stuff worked out or not, the technology is going to continue to grow. And if you want to be part of the growth in technology, this is the best time, I think, to start looking into potentially getting involved in cryptocurrency. So that's all I wanted to cover today. I just wanted to go over just kind of the state of the market and, just kind of put my own spin on what I think is going on. I've been looking at this because obviously I'm in the space, right? So I have a lot invested and I want to see the space do well long term. I want to see it become another viable asset class. And unfortunately, until we get these rogue actors out of the space, we're going to continue to face these setbacks. But doesn't mean that it's over. It's not all doom and gloom. There's a lot of great people doing a lot of great work in the space. And I think we got a long way to go. I think we're still closer to our infancy than we are to being fully mature. So, like and subscribe to the channel. I'll leave some links in the description box if you're interested in opening an account, if you're interested in getting a Ledger Nano, if you're interested in learning just more about, I'm going to put an Investopedia article up there about just kind of the basics of blockchain technology and just teaching you kind of, what is Bitcoin, right? What is Ethereum? What is a cryptocurrency? You can learn that from the Investopedia article I'll put in the description box. And we'll do these kind of follow-ups every few weeks. I'm going to do little follow-ups in this arena. And that's how we're going to continue to round out the channel. Like I said, there's going to be something for everybody every week. Maybe not something for everybody every week, but something for somebody every week. That's how we're going to approach it. So thank you once again. I appreciate all new subscribers. I think we're at 120 subscribers now. Appreciate you very much. We're continuing to grow. Very, very high. You've been very helpful with your comments, questions, things that you sent us. Help us build out better content for the channel. Everybody have a great day. God bless. Talk to you next time.